In the video, you will learn different types of reversal patterns, such as head and shoulders, double tops and bottoms, bull and bear traps, and triple tops and bottoms. A prerequisite for any reversal pattern is the existence of a prior trend. Reversal patterns indicate that an important reversal in trend is taking place. Trading volume plays an important role in confirming these price patterns. The most common trend reversal patterns are head and shoulders, double tops and bottoms, and triple tops and bottoms. Let's take a look at the most popular reversal pattern, the head and shoulders. A head and shoulders top consists of a rally to a new high with lower volume and a break below the uptrend line. Then a rally with lower volume fails to go above the previous top. At this point, we can identify the neckline by drawing a straight line connecting the two previous bottoms. The reversal is activated with a break below the neckline being accompanied with increased volume levels. Failure to go back above the neckline acts as a confirmation towards a new downtrend. Apart from signaling the end of an uptrend, a head and shoulders top pattern can be used to identify potential targets. To find the initial target of the reversal, we measure the distance between the head and the neckline and project the distance from the break of the neckline. It is important to note that this is only a minimum target, and usually markets move beyond this point. For head and shoulders bottom, it is just the opposite. A rally to a new low accompanied by lower volume levels and a break above the downtrend line. Then a dip on lower volume levels fails to go below the previous bottom. At this point, we can identify the neckline by drawing a straight line connecting the two previous tops. The reversal is activated with a break above the neckline being accompanied with increased volume levels. Failure to go back below the neckline acts as a confirmation to the new uptrend. For the initial target, measure the distance between the head and the neckline and project the distance from the break of the neckline. A similar pattern is the double top. As its name implies, the market creates two tops at the same level. A break below the last bottom confirms a double top formation. Increased volume at the breakout level acts as confirmation for the reversal. The initial target is outlined by projecting the height of the double top pattern from the break of the last bottom. In the case of a double bottom, the market creates two bottoms at the same level. A break above the last top confirms a double bottom formation. Increased volume at the breakout level acts as confirmation for the reversal. Height of the pattern outlines the initial target. A bull trap pattern is a pattern where prices break above the last top, generating a bullish signal before reversing and trapping the buyers who acted on the signal. Failure to continue higher and then a break below the last bottom confirms a bull trap formation. Traders should use filters to avoid these traps. A common filter is a two-period close above the level. Like previous patterns, the same target measuring techniques apply. A bear trap pattern is a pattern where prices break below the last bottom, generating a bearish signal, before reversing and trapping the sellers who acted on the signal. Failure to continue lower and then a break above the last top confirms a bear trap formation. Traders should use filters to avoid these traps. Another filter is a price filter with a percentage drop below the level. As before, the height of the pattern outlines the initial target. In a triple top formation, the market creates three tops around the same level. A break below the last two bottoms confirms the triple top formation. Increased volume at the breakout level acts as a confirmation for the reversal. Again, the initial target is outlined by projecting the height of the pattern from the break of the last bottom. For a triple bottom, we have three bottoms at around the same level. A break above the last two tops confirms the triple bottom formation. Increased volume at the breakout level acts as a confirmation for the reversal. The height of the pattern outlines the initial target. Another reversal pattern is the diamond reversal. Think of a diamond as back-to-back symmetrical triangles, a broadening top followed by a symmetrical triangle, or a complex head and shoulders top. As prices climb, they form higher peaks and lower troughs until the process reverses and the range narrows. Do not expect your diamond to be always perfectly symmetrical or diamond-shaped. The break of the neckline is key. Eventually, prices drop out of the pattern in a downward breakout. Sometimes prices can pull back to the diamond trendline boundary before slipping away again. But this is not always the case. If the rise leading into the diamond was unusually quick, the decline after the formation is completed is expected to retrace all the previous gains. A quick rise can be an identification clue to a diamond formation. The diamond formation is only confirmed after a break below the trend line. The rounding top pattern is long-term reversal pattern that can take as little as 3 weeks to as long as several years to complete and develops at a market peak. As the price drifts towards the high point of the pattern, investors lose interest in the security and upward momentum dissipates. The lack of interest is also characterized by the volume level, which almost dries up at the time the price is reaching the high. Towards the end of the pattern, both momentum and volume increase exponentially. The rounding top is constructed by drawing a circular line above the highs. The price action of the saucer is exactly opposite to that of the rounded top pattern, but the volume characteristics are the same. As the price drops towards the low point of the pattern, investors lose interest in the security and downward momentum dissipates. The lack of interest is also characterized by the volume level, which almost dries up at the time the price is reaching the low. Towards the end of the pattern, both momentum and volume increase exponentially. This pattern is constructed by drawing a saucer-shaped letter U line below the lows.